Liberation Day, the sequel. You might remember the first Liberation Day. Well, that felt pretty confining because markets were very volatile and mostly down. Consumers, retails fretting about higher prices. CEOs writing about potential recession chances increasing. The bond markets getting spooked. And that brought us to Liberation Day, the sequel. Midday today, when President Trump announced a 90-day pause on his planned reciprocal tariffs. Everyone gets a break except China. Tariffs against the world's second largest economy, that's China's, will now rise from 104% to a scheduled 125% tariff rate. Earlier today, China increased its retaliatory duties on U.S. imports to 84%. No word yet from Beijing on the latest increase from the Trump White House.
China is the most imbalanced economy in the history of the modern world, and they are the biggest source of the U.S. trade problems.
On Wall Street, well, the market flashed between red and green before, and this is the only word for it, skyrocketing after the president's announcement. The Dow surged 2,900 points up. The S&P 500 posted its biggest gain since 2008. And all we can now prepare for, I guess, is an elaborate game of let's make a deal.
A deal's going to be made with China. A deal's going to be made with every one of them. And there'll be fair deals. I just want fair.
I want to start tonight with Jill Schlesinger, who joins us from New York. Jill, you are very expert at this, but even by your long-standing expertise, today was a wild day.
Yeah, I mean, it's funny that you mentioned 2008 because that's exactly the feeling I got, that I remembered feeling in the October of 2008 where the market was collapsing and then there was some sort of deal to bail out the banks and then it finally went up. So all of this does feel a little bit eerie. To be clear, though, at that time we were facing a massive financial and housing crisis. We're not there now. And this dive and now the recovery feels self-inflicted. And I think that's the frustrating thing from the point of view of an investor, which is, why do we have to go through this? Couldn't we just do the 10% from the beginning?
And Jill, I'm so glad you mentioned the 10% because that gets sort of lost in the headlines about this. So that 10% tariff rate, which now the White House describes as a floor, still exists. Exactly. And lots of people are saying, wait a minute, that's a $300 billion tariff tax on the U.S. economy, not as large as these others, but it's still there. And not to mention the steel, the aluminum, the cars, the auto parts. And so, listen, I still think we face a problem. It's not as significant a problem, which is the market is telling this, and economists are telling us that we are facing a slowdown in economic growth, not as severe as we might have seen if those retaliatory tariffs were in place, as well as prices rising. That combination, that stagnating economy with inflation, stagflation, that is a scary word for a lot of people. It makes a lot of the business folks out there anxious because they really don't know what to do next. You know, Major, I was thinking about this. If you're at work and your boss tells you to go execute something, you say, fine, great, I'll go do it. And then 3 days later, it's a whole different game plan. You'd say, like, my God, that boss is crazy. Well, that's what we're living through. What about China and the tariffs that the president announced increasing today? How does that filter through all this? Well, I mean, I think it's going to be interesting to see what China does next. Remember that China has been preparing for this moment since election night. So they have been very skillful in not talking too much. They're building alliances with what were formerly enemies, and they are now talking about opening up alliances. I think there's a bit of a fear among the geopolitical part of this that we are pushing China into the arms of some of our allies. So I think these deals need to get done pretty quickly. Otherwise, remember, China is a huge supplier. China is also a consumer of our goods, not in the same scale, but they are. And so it's a huge market. It's going to be interesting to see how we get to the end of these negotiations, Major. One last thing, not to bring you down, because I don't want to do that to you, buddy. But we talked about that big rise in 2008. The U.S. stock market during the financial crisis did not bottom out until 2009. So it's going to be a bumpy ride, everyone. Hang on. As the Chinese proverb goes, may you live in interesting times, not always meant as a gift. Jill Schlesinger, thank you very much. Thanks.